All right, all right. Sorry for a bit delay. We started a few minutes after 8 today. Welcome to another episode of Wealth Building Conference. Today is another amazing day, fantastic day that we're going to learn a lot from one of the experts that has been helping professionals across Canada to build wealth and also to manage their taxes. But before I go in, just like a regular way of starting, I want to say good evening, good morning, good afternoon, wherever you are listening to me. I'm your regular host today, Oludare Fasola, and I have in the house Tolu Lemo. I'm going to introduce Tolu Lemo to you after a brief background, just to keep everything in order. Just before we proceed, I want you to please, wherever you are joining, I want you to please type your name and where you are joining. If you are joining from Canada, just type your name and say Canada. If you are joining from United Kingdom, if you are joining from any part of the world, please make sure you type your name and state where you are joining from. Okay. So once again, you're welcome back, and I want to thank everyone for joining. For those of you who have been following up on this, you know, this program is Wealth Building Conference. Wealth Building Conference. The goal is just to produce, to help us to build wealth, educate us on how to money works, because nobody they didn't teach us in the university how money works. So we need to understand how money works anywhere we find ourselves, right? Just before we go in, I would quickly want to introduce Tolu Lemo to the house. This today's presentation is going to be very, very powerful. If you have medical professionals or business owners who have been struggling to about taxes, or you have been giving a lot of leaving on money on the table for CRA, this is another way to stop doing that. Tolu Lemo is here. He's going to share his experience and how he has been helping medical professionals and business owners to manage taxes in Canada. He's a chartered professional accountant of Canada, and he has a lot of wealth of experience. So I'm going to introduce Tolu Lemo to you. 1 second, okay? Right. So let me introduce our guest speaker today to you. Tolu Lemo is a chartered professional accountant with over 15 years of experience in accounting, banking, and tax consulting, including stints at RBC, TD, and ATB Financial. He is highly analytical, innovative, result-oriented, and motivated, with a strong understanding of financial statement and risk management policy. A strong relationship builder with excellent knowledge of business development strategies and good organizational excellent problem solving and strong communication skills. Tolu Lemon is committed to supporting Black community by volunteering his time to discuss personal finance, tax, and investment at various forums. Outside of work, he loves spending time with his family and watch and play soccer. Thank you once again. Please help me to welcome Tolu Lemon to the house. Tolu Lemon, over to you. Please take it up from there. The floor is
All
yours.
right, Mr.
How are
Mr.
we
Mr.
doing today?
Fashola, thank you so much for this opportunity to actually speak to people. It's always my joy being part of this kind of forum and also supporting the Black communities and any community anywhere in the world. The most important thing and one of my mantra has always been, supporting people, lifting others. That's the only way you can get to the top as well, which is my motto in life. And I always appreciate this forum. Thank you so much for that. So today, we're definitely going to be, delving into strategic, tax, and we are going to have some wonderful conversations around that. And in case you have any question, you can definitely post on the chat, and then we'll just pick it up from there. And then in case you have any other question in future, you can always get in touch with Mr. Dari. So what I do mostly is to actually talk to people, because I've seen a lot in the last 7 years that I came to Canada. And looking at my profession as well, so many information I have, which I always try to share with people, just for us to advance our courses. I always tell people we came to Canada definitely not to come and play, to have a living and also have a fortune. Two things. We live day by day. Then having a fortune means we are able to live and pass on, whatever we've earned over our lifetime, to our offsprings and our children. Definitely something I've seen. I've seen generational wealth being passed on to about fifth, sixth, seventh generation in this land. And it wouldn't be a bad idea for us to also, have the same thing in place.
Yes.
Now, in personal finance, tax in this land has been a key part of it. And it baffles me that, some people say it's everything that we know about knowledge. People, when you don't have knowledge, there is, people are being destroyed. Some people say knowledge is power. That is
Absolutely.
the exact thing. That is the truth. And
Absolutely.
I have somebody that we always sit down under every Sunday, and we always tell you, you don't need to reinvent the wheel. You
Hmm.
know, when you have seen people that walk through a particular road, try as much as possible to, tag along with them for them to be able to explain to you things about that particular expressway, so that you don't fall into the same thing that they have actually gone into. And it baffles me a lot because many of our people, they always believe that they can do things, they can do life by themselves.
Hmm.
It's the same mindset that we normally have. Like a professional we advise, and they will tell you that no, they don't want to do it this way. At the end of the day, they always believe they know much more than the professionals. So this thing that I'm doing is just to share information, to expand our cause as Black people, and to
Hmm.
also see opportunities in the land. This land is so blessed. That's what I always tell people. It's so blessed. You can see people can come in and become from nothing, become somebody. And there are so many opportunities locked in here that we can actually explore. But
Hmm.
I always say this again: you know what you know.
Hmm.
I will say it again. You only know what you know. If you know it, yes. If you don't know it, you don't know it. That's just the truth. So we are going to look into this matter, an aspect in finance. And Mr. Dara and I, we are working on other, lectures about business acquisition. That will be probably the next one. You can engage him thereafter,
Hmm.
to see how you can retain wealth and also expand, your wealth portfolio. But today, let's look into tax, and we're going to get into it. I'm not going to waste so much of your time because I know definitely we are very busy businesses. I mean, business owners, medical professionals are so busy. They are busy people. So
Cool.
when we are talking about tax, this land is a land that if if you put anything into it, whatever you sow into it, you reap the same thing. So when we are talking about taxes, some people, I've advised people in the past, some people decide to go via the route of sole proprietorship for their businesses, and I've told them several times that is not the way to go. And
Hmm.
we are going to look into that today. And if you are a business owner today, after today, you are just you are incorporated. I mean, you are only have a registered business as a sole proprietor. After today, please, um, you can look into it and just go ahead and incorporate a company, okay, for your business purpose. And I'm putting up this, and I'm going to say a disclaimer: we are just doing this pro bono. We are not charging anybody for it. So the disclaimer is, in case you want to, have some conversations, you can approach your accountant. They can shed more light on it. You can cross-reference what I'm talking about today, and you can talk, you can speak to your professional about all these things that we're going to be talking about, your tax accountant or your accountant at the end of the day. So we have, incorporation, it gives you a lot of, benefits. And one of the benefits is sole proprietorship versus incorporated companies, or versus what I call private companies. The difference between the two is, in the eyes of the tax law, you and your sole proprietorship business or registered sole proprietorship business are the same. That is tax law. So if you make 1 million today as a sole proprietor, is the same. You are going to be paying taxes, the personal taxes on what you have earned as a sole proprietor. So there's no, in the eyes of the law, there's no difference between you and your sole proprietorship business.
mm,
Okay, but when you have a registered, an incorporated, business, or a company registered, or private company registered, and you run your business in the eyes of the law, there is a difference between you as a person, and your company also is a person in the eyes of the law. That's why we call them corporate entities. All right, because they have their name, they can buy assets, they can take up liabilities on their own. So even if there are challenges, there are liabilities, there are, let me say, charges, or there maybe there's an issue, you have to go to the court. The company itself is a standalone. Okay, so, and it shields you from risk at the end of the day. That's why they are called limited liability. So the liabilities of private entities are limited to the private entities. But in the case of sole proprietorship, if there's an issue with that business, you and your business, which is the sole proprietorship, there is no difference between both of you. So in the eyes of the law, they can take both of you to court. But as a private entity, a private company, you can actually be on your own. You can say, yeah, that's the company on its own. Let him deal with himself, okay, or with itself, separated from you. So that's the benefit. So the benefit is, number one, small business deduction, like the first 500. When you register a company, if definitely, probably I'm talking to people, small companies that are actually earning income of about 1 million, $2 million. Those are small businesses. Okay, next time when we are talking about business acquisition, we talk more about those big, or that medium or big companies. Okay, we expose us to some of those things. So the first 500,000 of active business income is being taxed in Canada, is being taxed at a lower rate. Like I mentioned, this is 12% to 15%, right? But if you are earning 500,000 in Canada today, as a personal, your personal income tax alone cannot be less than 40 or 45%, thereabout. But if you do it, you have a business, an incorporated company, and the first 500,000, how much are you paying? You are paying 12 to 15%. So I
wow.
always tell people, uh, just go over this, you can never miss it.
Mm,
The second thing is, there's something called retained earnings. So when you earn so much money, after you have been able to, they charge you 12% to 50%, which is the first 500,000. The maximum in Canada, the maximum tax, for companies, or let me say businesses, are probably like federal tax is about 38%. When you now go to provincial, probably is about 2% or 4% thereabout. Something that is very reasonable, and they encourage people to do that. And also, it's different in terms the different tax rates, for different type of businesses. If you're into agric, it's almost different. If you're into some green energy, business, or line of business, it's a different ball game. So I won't go into the complexity of all that. Okay. So another thing, or another benefit, is the tax deferral. Okay. So what that means is, if I continue to earn so much money, and I'm being charged 12%, 15%, that money, I don't need to pay myself that money. Okay. This, I will just quickly explain it. For example, let's say Mr. Dare has, earned about $1 million last year into, in an incorporated company. 500 out of that, Mr. Dare would have charged himself, salaries and all that, would have taken money. Um, Most expenses, can be charged off on the incorporated company, on the sole proprietorship, but there are limits to what you can do over there. So whatever you have left is what is called retained earnings. Okay,
mm,
that retained earnings, you can carry it on and on and on and on in the incorporated company. Those retained earnings form part of your assets in the long run, or it's even part of your asset at some point. So you can use it to acquire additional business assets. okay, that will continue to generate money for you and you continue to run it that way. So in that case, you are shielding yourself, from taxes while you continue to build, wealth over time. Okay. The third one about this incorporation piece is you can split income. Okay. For example, if I have an adult, maybe I have an 18-year-old, a 17-year-old, or even 16-year-old during this summer season, right? They are going to be on holiday. Children are going to be on holiday. Okay. You can pay them, okay? You can pay them. You can register them as part of the company owners. Maybe you give them like 1% or 2% at this point in time because of their age. Maybe they are just 18, 20. You can literally begin to pass over. Let me just put it that way in black and white. You can literally be passing over, let me say, their inheritance to them. I hope you are getting what I'm saying. You
Yeah.
can pass over their inheritance to them in form of dividend.
Hmm.
All right. And you can just be paying them. They may not even be doing anything in the company, for example, but you are just paying them dividend. Now, it will shock you if you are not aware that it's better for you to take dividend or pay yourself dividend than say you are paying yourself salaries here in Canada. Why? Because the taxes that you pay on dividend is not as ridiculous as taxes that you pay, on personal income, or let me say on salaries, on wages. Okay, so that's just put that on one side. We are going to talk about it, probably in the next or two slides. All right. So you pay them dividend. It's almost like you passing to them some inheritance. You pay yourself dividend instead of saying you're paying yourself some salaries, which has lower tax rates. So these are the things that many people do. As an accountant, your accountant will advise you to actually go ahead and do things like this. Why? The bottom line is we are just trying to what? We are not evading taxes.
Hmm.
Okay, we are not invading taxes, but we are just looking into the tax law and see what are the things or areas which can actually benefit us. And that is fantastic. And that is the only thing. We are not committing any crime. We are not committing any, any crime. We are not committing any, tax fraud. We are just doing what is within the ambience of the tax law to actually maximize our own benefit, to maximize our wealth. All right. So let's move on to the next slide. So I think I'm there now. Salaries versus dividend. All right. When you look at that, salary benefits to you is number one, in this piece of incorporation, you can charge a portion of the income that comes to you within a year. You can charge a portion of what? You can charge a portion of salary as a percentage that you want to earn. Then you can focus also on dividend as well. So two things are actually in play here. Number one, salaries are actually deductible. They are deductible, what we call deductible expenses. So what it means is when you have your income, your salary is an expense, whatever that is left is what is called the income or net income, okay? Which can now form part of your retained earnings at the end of the year. Okay. Now, when you pay yourself salary, you can actually, you will begin to have what is called RRSP. That's the Registered Retirement Savings Plan, contribution rule. When you don't have a paid income, okay, or employment income, salary is an employment income, then you cannot have RRSP, okay? But you can strike a balance between these two. You know why I say so? When you pay yourself more of salaries, it's almost like you are going to be paying more of income taxes. Okay. But when you pay yourself more of dividend, the tax rate, the tax that you pay, your taxable income will actually be, let me say, the tax that you're going to pay is going to be reduced compared to you paying yourself salaries. Okay. But at the same time, you won't be able to have you can't have any CPP contribution room, okay? No RRSP for you. But I've come to realize something. Who cares about RSP? When you talk to your tax accountant, what you can do is to do what is called simulation. You can simulate. That's what some people do. You can simulate your tax in the sense that what should go to salaries, what should go to dividend at the end of the year, and see what the impact is in terms of
Hmm.
tax that you're going to pay. Then you go for the but I've tried the simulation over time as well, and I've discovered that dividend is mostly better, than salaries. Okay. However, when you have that money, so what do? When you shield yourself from taxes? Even though you cannot do RSP contribution, we know that. You cannot do CPP, we know that. Then you can definitely put some investment in place for yourself. But the only challenge there is, I know we know for sure the difference between a regular investment and RSP investment, or let me say a registered investment. A registered investment, what it means in an RSP bucket, whenever you earn or whatever income you earn in an RSP account, you don't pay taxes on them. But when you have a regular investment, whatever you have, I mean, whatever you earn as income on those investments, you pay. That's why I said you can balance your portfolio of investment, or you can balance what you pay as salaries and also what you pay as what? As dividend. So when you have a good tax accountant in place, they will do the simulation and put all this into perspective. Okay? But let's move on. So I've explained professional corporations why you need to have it. Okay, it helps you to take advantage of tax benefits for sure. And like I mentioned at the beginning, that if you have never done it and if you have never registered or you don't have any incorporation, I will advise that you go into it, like register a corporate company, a corporation rather, to be able to take benefits, have maximum benefits. Okay. So another thing that we need to look at, which I also mentioned at the beginning, is the asset protection. Okay. The limited liability protection for business assets. That's the truth of the matter. Like I mentioned, there is no separation between you and your business if you have a sole proprietorship being registered for you. Honestly, if you are yet to do that, go and do that, like I mentioned, so that you can shield yourself from any form of, future liability in case anything happens in future. You have flexible compensation. That's another option for you. When you register as a sole proprietorship, whatever you earn as income is being classified as your salary. There's no discrepancy between the two. But when you have an incorporation in place, so you have option of salaries, you have option of dividend. Okay. As a matter of fact, there are other expenses that you can actually pass on to the incorporation, which is still liable to a certain extent. So that's how good, having a professional corporation in place. Then the third one is the retirement planning. Do you know that when you have a corporation, you can actually pay some form of pension, or let me say flexible, you can have a flexible pension plan for yourself, which is not
Hmm.
taxable. Which is not taxable. But when you are running as a sole proprietorship, you cannot do all that. But when you are running as an incorporation, you can set up a flexible pension plan, for yourself, which is not taxable. It's tax free, okay, to a certain extent in the ambience of the tax law. All right. So those are the benefits, of having an incorporation. So another way, this is actually big. I didn't come to realization about this holding company arrangement until of probably recently. And you will, if you are into business finance, sometimes you might have come across something like this, and you begin to say, why the connectivity? Why having so many corporations within a particular group? Why having a holding company? The essence of having all that is to three things. Number one is for asset protection. Let me give you a perfect example. Mr. Dare Company A is the holding company. Mr. Dairy Company B is a subsidiary. So whatever the subsidiary earns at the end of the year, they pass it to the holding company.
Hmm.
Okay? So let me
Hmm.
just shock you. So in case there is an issue with subsidiary B, which is Mr. Dari B, company B, there is difference between company A and company B. So
Hmm.
that means technically you are stripping company B of his assets, not assets, of his income. So when you look at it, company B might not have any retained earning because everything is being absorbed by the holding company. So that's why you will have a holding company that is practically investing into different subsidiaries. And at the end of the year, they move all what they have earned into the holding company. And I will show holding companies don't run any business.
Hmm.
They don't run any business. They are just an investment company. We call them investment co. Okay, they are just an investment company. Why? If there's any liability on those subsidiaries, they are being limited. That's why we call them limited liability companies. They stay there, they don't pass or they don't get into the holding company's case. So that's a way of shielding yourself, protecting yourself, and having some accumulation of wealth. Okay. So tax efficiency, tax efficient investing, that's another thing, is a way of managing excess profit strategically. Like I mentioned, you manage your excess profit. That's why you see it is the holding company that goes into other forms of investment. Okay, and they do that by registering subsidiaries for each investment. Okay, so for example, if I would need to buy a property now and I have a holding company, so that holding company will register a subsidiary, so they can call it condo unit. So that's the name of the company, and the holding company will now be the one to reinvest, the accumulated income or retained earnings into those subsidiaries. And when those subsidiaries eventually make money at the end of the day, they it's more like repatriation. They repatriate all those income they earned for the year back to where the holding company in form of dividend.
Wow.
Okay, in form of dividend. So you are shielding, you know, yourself from tax liabilities and any form of liability. The last one is succession planning. It's very easy for you to plan the succession. So it's just like the holding company as a standalone can actually be passed on, to the family, or probably you set up what is called a trust at the end of the day, and that's what we we don't do. Our succession planning is always zero, but I know
My
for
God.
sure we things are changing within our communities. People are getting to know. Because knowledge is power. People are getting exposed. So those are the things that you can actually, do. Like I mentioned, talk to your tax accountant. And if you want us to have some conversation to shed more light, you can talk to Mr. Dari, so that we can have some conversations on it as well. And okay, so let's move on to the next one: retirement and investment strategies. I think I've mentioned individual pension plan. That's another good thing. I mentioned a flexible pension plan. So defined benefit plan can be funded by your corporation, but when you have a sole proprietorship, I don't think you can do that. You cannot do that. You cannot say a portion of the income that comes to me. No, you can't do that. But an incorporation can actually do all those things. That's the beauty. Okay, that's the beauty. So please, you can take advantage of this. For example, and this individual pension plan, when the company pays it, you can. Let me just open us to it. When the company pays it, it's what is called a deductible expense, or what is called allowable expense. So, for example, Mr. Dare is paying into a pension plan, it becomes a deductible, or allowable expense. So, at the end of the day, the income that will be declared at the end of the year is reduced.
Hmm.
But that particular expense, who owns it? It's still Mr. Dare that owns it. But when you have a sole proprietorship, you can't do that. That's not allowable. But this is an allowable expense under the tax law for a corporation. Okay. All right. So let's investment strategies that you can also look into. We've talked about taxes. We are talking about investment a little bit now. Is the RSP or TFSA? These are fantastic. If you don't have, I think Mr. Dara is going to share something with you in terms of. I'm not sure that question is part of it, but um, he's going to share a Google Sheet just to be able to respond to some few questions. When you don't have an RSP, the good advantage about RSP is when you earn 100,000 today, you have an RSP contribution of 20,000. When you take 20, when you pay, I mean, when you invest that same 20,000 or you contribute to your RSP up to 20,000, what you are going to pay in form of tax, your taxable income at the end of the day will be 80,000. That's what RSP does for you. But TFSA, definitely the differences between I mean the difference between those two is that for TFSA you can't use it to reduce your taxable income. Okay, but RSP can use it to reduce. But the good thing about both of them is when you have those two tools, whatever income that is being generated in those two investment accounts, okay, you don't pay taxes on them. You don't pay taxes. So that's how good the land of Canada is, the country of Canada is, and it's good to always take advantage of those things. Yeah, corporate investment, just like I mentioned to you, that you can use holding companies. Even if you don't have holding companies yet, you can use those incorporations that you have. You can look at your retained. So probably some of you are sitting on large retained earnings. You can begin to look for ways to invest them, where to invest them, businesses that you can invest them. And let me just persuade us, or let me just take this thing out of our mind. And that thing is you let me put it this way, mildly. That thing is, don't believe you must always be involved in an investment of yours. I will say it again. Don't believe that any investment that you cannot be part of its day-to-day running, you cannot be involved in it. You are robbing yourself. And I will say this. I've seen people that are not even part of the day-to-day management of many corporations, but they have shares, they have investment in those companies, and those companies are being run, by professionals. All what you need to demand is what is called accountability. So that's why when we talk next time about business acquisition, we will be exposed to some of these things. Why? Let your money work for you. You can't be earning, or you have retained earnings of almost like $2 million sitting in your incorporated account, I mean, in your company, and you are not investing it. It's not going to do anything for you. Okay?
Absolutely.
It's not going to do anything for you. And I've come to realize another thing is more investment of companies that you invest in, the more wealth you actually build over time. Because here, what investors look at, or what finance people look at, is if I put 1 naira into this investment, or put 1 naira into this company, then 5 years down the line, if I invested like 1 times of that particular company's EBITDA, uh, we will get into it next time. That's the next conversation. If I invest 1 times into it, by the time I'm maybe like 5 years after, my aim, or our aim as shareholders, is whenever we want to sell that company, we should be able to sell that company at 5 times EBITDA. So 5 minus 1. So that means you have improved that company within 5 years by 5 times. And if you want to cash out, you can cash out. So that's why you need professionals to manage. You have people that don't even know where the businesses are technically, but they put investment in it. Why? Because they have people responsible for the management of those companies, and they give accounts. And that is a good thing about here. Okay, you can monitor things. You don't have to be there day to day. Okay, to run things or to see things. So that's another thing or challenge that we have in our community as of today. We don't trust. Yeah, I know it's tough based on background, but I think we need to begin to, reorientate ourselves about how businesses and how wealth expansion accumulation works. Okay, lifetime capital gains exemption. This one I'm not going to talk so much about it, um, but it's also a good strategy to actually mention today. Like if, for example, after like 4 years I've run my medical profession, I mean, let me say my medical, what do we call it now, clinic,
Yeah.
okay, and a family clinic, and I need to get out, I'm tired. People do that. It's awesome. You've made so much money, the business has grown. When you started, you're probably, you and your wife started running it. Now you have like 20 staff. That's a big company. That's a big business. You have like 20 staff. So that expansion, when you sell that business as of today, there's no way there won't be capital gain. Why? Capital gain is all about how much you invested in it, $1. Right now, what is the worth of this business? Okay, $20. Capital gain within is $19. But the good thing about Canada and this particular, um, thing which I call gesture is the fact that when you is a good gesture. When you earn so much on the at the end of the day, your capital gain tax is almost like probably like 2 million, 1 million. This is telling us that you can actually take out, okay, 1.0, let's say 1 million out of it. So the balance of 1 million will now be the one that will be taxed. And we know for sure under capital gain, the only thing that is taxable, on the gain is definitely 50%. Okay. So that means instead of you paying, 50, I mean, being taxable capital gain of 50 of complete 100%, which would have been like 1 million, right? Let me say on 2 million based on the analysis I just did. So instead of doing 2 million, then you take out this 1 million, which is more like deduction for you. And then the balance that you pay on is now 1 million. Okay.
Hmm.
And this has actually changed. I think 2025 should be 1.25 now. This, yeah,
Wow.
it's 1.25 million now. So it
Wow.
has changed. 1.25 million. So you can deduct that. So what that gives you is you can still shield. That's a good thing. You can, because it's a small business. It's classified as a small business. So far, it's still within that band of small business. You can actually take advantage of this. You can talk to your tax accountant, and if you want more elaboration on it, for sure, one is available to actually give or do justice to that.
Cool.
Okay, the next thing, we are almost done. Just 2 minutes amount. The next thing is, I mentioned this income splitting. I don't know if you get what I'm saying. I
Yeah.
won't talk too much about it in camera. Yeah. So you can have some, probably you have some young adults that are working summertime. As a matter of fact, they can be working full time. Maybe they are in school. Thank God for internet now. You can pass work to them. They can do work for you. What this says is you can actually pay them. Like I mentioned the other time, you can literally pay them. And it's almost like you passing wealth, to them. Okay. So when you pay them, you're developing or improving on their wealth strategy as well. Because when you pay them, they will have what is called RSP contribution as well. I hope you get what I'm saying. When
Yep.
you have, they begin to build that RSP contribution. You can pay them and begin to have pension plan for them too. But when you have a
Hmm.
sole proprietorship, you can't do that. You can't do all that. Yeah, it might not work. You can't do all that. But you can take advantage of this. So it's almost like you having a family strategy, tax strategy, giving them some loans, which they will pay back at some point, which is good. You can set up what is called a family trust and you begin to manage that one while you're even alive. Okay. So those are the things that we've seen. Those are the advantages that you can, latch on and begin to improve your wealth or find a way of reducing your taxes. So this is a big one. Expenses. or expense deduction and optimization. There are so many expenses that you can charge off, off your income if you have a registered, incorporation, even if it's a sole proprietorship, you can charge off some. But there are few things that you can charge off, and I'm going to explain that. For example, your automobile expenses, all those things, you can easily charge them off. If it's a small business that you have that you are running from your basement, the percentage of the square feet you are using within the basement over your utilities, you can charge them off. Your mortgage interest, you can charge them off. Portion of it based on the calculated square feet that you use as office. You can
Right.
charge them off. You
That's
know,
powerful.
you go for education, higher education, you are increasing your knowledge anywhere. You are traveling for businesses, even if it's not business, you can charge them off. Those are the good things about here, about Canada, the tax law so far. I was in the UK last, I think, the beginning of the year. Things have changed there. All these things, they can't really do much, so again, in terms of all these expenses, because I ask questions. But here we still have the liberty to do all that. So, you can do all that. So home office, which I've mentioned, so many all home expenses, apart from the mortgage itself. But interest on the mortgage, you can charge it off. But principal, you can't charge it off. You just
Wow.
calculate what the percentage is. Then health plans, you can implement what is called HSC for free medical, expense and reimbursement. So those are the things when you have incorporation, you can actually take charge of those. For example, health insurance for yourself being paid by the company, you charge it off. That's the advantage, and that's a good thing. Okay, the last thing, this is the last slide, is in the document being shared. Okay, this is part of it. Do you have life insurance in place? We've seen people that have built wealth from here. We've seen generations that have built wealth from here. So those $50 that you pay, $100 that you pay, $200 that you pay monthly is to safeguard our future ones. So when you have this tool, this is also a wealth building tool. And Mr. Dari can speak more to this, because that's his field. He can speak more to this. And I also have little understanding about it. Okay. So for business continuity, you can actually consider this. And the last piece which I'm going to mention is estate planning. I'm
Hmm.
not a lawyer, but I know how good you having a will in
Hmm.
place, especially in this land. Having a will in place. So when you don't have a will, definitely you have to talk to your lawyer so that they can help you with one. So that I know for sure Mr. Dari can talk about estate planning and wealth, planning. Those are
Oh,
good things that we need to start talking about. That's why Mr. Dare, me, we are big on personal finance, which is inclusive of business, well building, insurance, tax management, and so on and so forth, just for all of us to build our economy. And I think that's the truth of the matter. It's high time we start looking into this and doing businesses together,
oh,
sharing information about it. And thank you so much for your time. I
wow.
wanted to do this in 30 minutes, but I've added like almost 30 minutes to it.
That's
All right.
okay. Wow, wow, wow. This is fantastic. If you get value today, please, I want you to drop on the comment section value. If you get value for these amazing presentations, please drop it on the comment section value. Uh, Mr. Tolu Lemo, I want to sincerely appreciate you for this amazing presentation. A lot of medical professionals are actually watching you. And one thing that actually really really makes me to be excited is the business acquisition strategies that you keep mentioning about. Just for you to know that Tolu Lemon is a business acquisition strategist. Like, he has helped a lot of, business owners, across Canada to acquire businesses. And as a medical professionals, you are exchanging your time for income, right? When you exchange your time for income, right, you exchange your time for money. Now, it is important that you must have a strategies in place to invest that money, because you cannot just continue to work and work and work and work. Even if you want to do that, at some point, your body system, health, age might not really allow you to do that. So, Tolu Lemo will be sharing a lot of ideas on how you can acquire more businesses while you still focus on your medical practices. And business owners, if you are listening to me, right? There is, we have to understand how to acquire more businesses while you will still focus on what we know how to do best. So, Tolu Lemo, I want to say thank you so much for these amazing presentations. I personally have learned a lot today. Okay, though I've been hearing this, but it like I just started learning about tax strategies and how to save money on taxes, especially for business owner. So we're gonna have another session, in futures on business acquisitions. I'm gonna share the data. I will promote that a lot on my social media handles. And of course, I will also invite especially medical professionals that I know they also want to, invest, they want to acquire more businesses. As a black community, like one of the things that we lack is trust. Like, but in this part of the world, Tolulemo mentioned that there is an accountability. Plus, I want you to put in the chat box accountability. When you put your money to work, you also must be accountable for the people that put their money to invest their money on the business. So, we are living in a country that is governed by law, right? So your money is highly protected. There are a lot of strategies, there are a lot of things that are put in place to make sure that your money is safe, right? So if you need more explanation, if you need more personal session, like please, you can book a call with Tolu Lemo. He's ready to share his idea for free, right? This is a free strategies session. You're not going to pay for this, but I promise you that you'll be blown away with the amount of information he's going to share with you. Once again, I want to say thank you so much to Lulemo for this presentation. So we're going to have another one next month, okay? July. Tolulemo will not be available July, right? Right? You're not going to be available July.
I need to take some time off.
Oh, yeah. You need to enjoy yourself, right? So,
Yeah.
for August, Toliema will be live on Wealth Building Conference again. So, invite friends, invite your business owners to come and listen to this presentation, especially on business acquisition. It's very, very important. All right. We don't want to build millionaires, right? We want to help people to build wealth without really, burnout, without living what they are doing, without living their 9 to 5. So on this note, I'm going to bring this meeting to an end. All right. If you need more strategy, like you need more information, you can scan this QR code and book. And I've already also shared a Google Sheet on the comment section. If you are not able to do this now, you can go to a social media and fill the form. It's just very, little questions about you. We just want to know you. We just want to see how we can help you further in your business, how you can work with you to save more taxes. Tolulemo mentioned here that we can leverage on tax law. There's no, I don't have any problem paying taxes, but if I can leverage on tax law to optimize my income, to optimize taxes, I think it makes sense, right, Tolu? It makes a lot of sense to do that,
It
right?
goes a
So it's
long way.
absolutely. So we are going to share this form here. So please fill the form. Let's get to know you. We're here to help. We just want to share what we know. We just want to share this information for free, right? For other people to learn. Once again, Tolu Lemo, thank you your for this session. On this note, I'm going to bring this meeting to an end. Thank you, everyone, for joining. Next week is another program. Join me on Saturday, 8 p.m. EST for another amazing session for business owners, especially for medical professionals, where we're going to be learning another important topics that will, change our life, build wealth, keep more of what you earn. Don't leave money on the table for CRA. Once again, if you get value, I want you to put on the comment chat value, right? See you next week. Thank you for joining. Tolu Lemo, thank you for coming in once again. Bye for now. Enjoy.
Thanks for having me.
All
Bye
right.
bye.
Take care. Bye.
Yeah. Bye.